What is going on, everybody? This is S Trades, and today's day 26 of the bootcamp. And in this video, we're gonna be going over how to pretty much apply all the concepts that we learned throughout this bootcamp. And I would say this is the final video, just for you to guys to put all the pieces together, see how I trade, see how I go about like charting the day before, how I go out actually trading for the day, what I think about, and pretty much just putting all the concepts that I taught you guys together into one singular video. So without further ado, let's get straight into the video. So first things first, I'm not going to have any writings or anything. I'm just going to speak for now because I will be showing you guys this on the chart. So I don't feel like this is needed to be written. But how do I put all the concepts together, right? So we learn about my strategy. We learn about different, concepts, liquidity, fair value gaps, all the important draws and liquidity, how to determine the bias and things like that. I taught all of them separately. Now, how do you put all of them together into a single point so you could be doing trading by yourself without kind of relying on anybody, right? So first things first, what do I do, right? Let's say it's the beginning of the week, Monday, right? What would I do? I would go on Sunday night and just kind of chart up all my levels, go look at the news, kind of see what's happening throughout the week, just so I have an understanding of how price action could be, looking like for the entire week. Because if we have, let's say, important news on Wednesday, let's say if we have FOMC and like the CPI on Thursday and things like that, and then there's no news Monday, I could be kind of expecting potentially for price to be a little bit slow at Monday because price is kind of waiting for the news to drop on Wednesday, right? And like I said, the night before, what I would do is I would pretty much just chart up all my levels, right? I'd put my previous day high, previous day lows. I would mark out all my important fair value gaps, right? 4 hour, daily, weekly, all the higher time frame fair value gaps, just to kind of have it marked out. And yeah, next step is 30 minutes before the market open, right? So what I would do is around 9 o'clock, 9:10ish, around that time, I would go on charts again and I would mark up my levels again. So I would now go and look into things like previous session high and lows, right? Let's say if there's any equal highs, equal lows, any SMTs that formed, any of the lower time frame fair value gaps, so 15-minute, 30-minute, hourly fair value gaps that are currently in the trading legs, and kind of see what is the obvious draws on liquidity, what are we doing, where's price trying to go to, right? Just to kind of get an understanding, right? The day before is just to kind of get the high time frame narrative going or the high time frame PD arrays drawn, so I don't have to, do it all the next day. And that next day, which is 30 minutes before, is kind of marking out for the short-term long draws on liquidity, right? So like the previous session highs and lows, some of the internal highs and lows, any fair value gaps, things like that, right? So once I do that, now market opens, right? As I draw out all my levels, I also set a condition to what I want to see, right? So for example, if we're 920ish or whatever, and then we have like previous session high, previous session lows or whatever, and let's just say I'm bullish for the day, right? I would set a condition for myself to follow. I'll be like, okay, in order for me to take a trade, I would want to see price kind of retrace down lower to, let's say, take out London low, or retrace down to like a 15-minute fair value gap, and then I would want to see a continuation off of it and things like that, right? So I would want to set a condition in my head just so I have like a plan and I don't have to kind of just guess and just be all over the place, right? So if I'm bullish, I want to see this and this and that happen, right? And if I'm wrong, I also have a condition for a bearish narrative, right? So for example, I could be wrong on a day, I could be having the wrong bias, and let's say I thought we were bullish, but instead we are bearish. So I would also have a narrative, right? So let's say I'll be like, all right, if I'm bullish, which let's say I am in this case, I want to see this and this and that happen, right? But in the case if it doesn't happen, and let's say this 15-minute fair value gap gets closed below, and we start having like displacement through the London lows and things like that, right? Then in that case, my condition is I'm going to be flipping my bias to bearish, and I'll be looking for a bearish place, right? So that is pretty much how you set a condition for yourself. This is super, super important because this eliminates all of the guessing. This eliminates all the overthinking, because in your head, you set up a scenario. It's either this or that happens, right? That's it. Nothing else, nothing more, right? If you see this and this and that happen, you go through that first plan, right? If that doesn't happen, if you're wrong, then your second condition is right, right? So that literally simplifies trading so much, and that is what kind of helped me the most in terms of kind of determining my biases and determining where the draws on liquidity, if I'm right or I'm wrong. Because a lot of the time what happens is you think that you're bullish, right, and you start to see that you're wrong for the bias and price is kind of going lower and stuff, and you kind of want to impose your own will to the markets, and you're like, no, I want to be bullish, I want to just take longs or whatever. Like if you're wrong on a day, it's fine. It's not a big deal, right? You're just gonna adapt. If you're wrong on a day, you just switch to bearish. But I'm not saying this be like, all right, this 1 minute chart is looking bearish, although the hourly 15 30 minute is all looking bullish. I'm just gonna switch bearish because this 1 minute fair value gap got closed. No, not like that, obviously, but that's why conditions are important, and I will show you guys more in depth later so you guys understand. Then pretty much once I have my conditions set up, the rest of the remaining things is just kind of sitting on my hands, patiently waiting for that to happen. And again, I'm sitting and waiting for my time frame, right? From anywhere from 9:30 to 11:10, that is when I'm trading, and that's when I'm looking for my setups to happen, right? So let's say at 10 o'clock we had something that's going on. Let's say if my bullish condition is starting to respect it, right? And let's say we came down to a bullish 15-minute fair value gap right next to a London low or whatever. Now we're starting to respect it. Now what do, right? Now we're just looking for an entry, and now we're looking for our draws on liquidity, right? So for example, like London high, Asia high. Let's say there's another hourly fair value gap above that is untapped, right? So we have a lot of obvious draws on liquidity, and they're all untapped. And now I'm like, all right, this bias and this condition that I set up for myself is playing out. Now I'm just looking for an entry, right? So that 15-minute got hit, right? Now we're looking for a highest time frame inversion to that, whatever leg that we're looking at. And let's say like the highest time frame is a 3-minute. Boom, I slap on along, have my proper risk management set up, right? Stops or whatever set below the lows, and take profits or multiple take profits set for those draws on liquidity, and I'm done. And the time frame again, like I said, is 9:30 to 11:10. If it starts to get anywhere above that, I'm probably going to be done. And sometimes I'll be going into the PM session if the AM session is really, really choppy, or if we have, let's say, like FOMC and things like that, then I would look into PM, right? So yeah, that's about it, right? And let's actually now get into real life examples, right? So pretend it's Sunday, right? Now we're looking at the news, right? This is currently the news for now, right? I'm recording this on Tuesday, and let's say if this was Sunday, and you'd be like, all right, so we have no news on Monday, we have some news on Tuesday, and then you see that the red folder news on FOMC is on Wednesday. So then this is obviously already telling me that, okay, no news Monday, probably going to be choppy. Tuesday might see some plays, and most of the volatility is probably going to be kicking in on Wednesday. And also another thing is, depending on the quarter that you're trading, for example, now we are in the earnings season, so you would want to kind of pay attention to that. And if you don't know how to look that up, simply just type in earnings season calendar, right? TradingView also offers the earnings calendar, right? If you just hop on here, check the earnings, and you see like when are they happening, right? What companies happen, like EA and UPS and all the big companies, right? There's also Microsoft and things like that is happening, right? So those are the two main things that you have to pay attention to, right? So once you got the news out of the way, right, and now you go and look at the charts around 10 o'clock or 9 o'clock, I will kind of be setting myself and looking at the chart, right? So just by taking a look at this, right, this is what I would be doing the night before. So this is my night before, right? So what I would do is, right, I would look at the overall direction. Where are we heading to? Like, what are we looking for, right? So on the daily, we see that price went down, right? Took out all these very important lows, right? Coming down on the 4-hour. What do we also see? Price started to retrace to this 4-hour fair value gap, right? And we see that it immediately displaces higher. Only if I could extend this 4-hour, right? Okay, so now we have this 4-hour right here, right? We see that the candle ends up coming down, an immediate reaction higher, right? So already that's already kind of telling me that we could potentially see higher price action, right? I would also set up my highs and lows, right? Very prominent highs and lows, right? So I would draw these out, right? Boom, 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 just for myself to be ready and see kind of where are the levels at, right? So I set all the obvious highs and lows, right? So I have this 4-hour also drawn. Now, what do we also see here, right? We have hourly fair value gap over here overlapping with equal highs, right? So this would be hourly / equal high, right? Very, very good liquidity pool, right? We have this very massive wick that got left, right? So most likely in this scenario, we could have other smaller fair value gaps in this leg, which is why we kind of go down lower. And coming down a little bit lower, right? On the 15-minute fair value gap, what do we see here, right? The day before, as we kind of retrace back down here, taking out all of this LR, literally easy, low resistance liquidity, right? We took all that out, went to this 4-hour. Now we're starting to inverse these 15-minute fair value gaps, right? Now I'm starting to think that price would want to see higher price action, right? I want to see price go up higher, right? I'm kind of already starting to set up some sort of a bias for myself, and I'm probably going to be looking for longs, right? So this is pretty much kind of how I would draw it out. I'll also draw out this little 15-minute over here, right? Because price tends to retrace to those as well, right? So now we have everything obvious drawn, right? These are very obvious draws on liquidity, right? So now fast forward to next day. We see that this 1 hour and equal highs already got taken, right? What do we see also? This 1 hour ends up closing above, right? So now this is even showing us more bullish price action, and it's showing us that bearish fair value gaps are getting closed above, right? This 1 hour got closed above with a lot of displacement. We saw follow through. We took out this high, right? So we could erase that and draw a new high, right? And what do we also see? We have this discounted 1 hour, which price could potentially trade into, but it doesn't have to because we're already trading from this 4 hour. So, that's kind of a condition for you guys to set, right? So taking a look at over here, right, we have data low that got set at 8:30 news, and we also have this equal low, very, very obvious for me to see at the moment, right? And we have a few fair value gaps down below over here, but since this is a data low over here, for me personally, that would be enough for us to see a continuation higher, or we could potentially also come down to this 1 hour fair value gap, right? So let's kind of see what happens now. Okay, we see that we have a data low with equal lows over here, right? This is very, very important and obvious draw on liquidity for us to get taken out first in order to see any kind of longs, right? And since we are bullish and we want to see price go up higher, right? I could just simply target this internal low and not have any other crazy targets, because if you just take a look at this leg over here, it is pretty big, right? We have almost 300 points, right? I'm not really expecting price to go up all the way higher over there. So in this case, I'm just fine just to target this internal high. And we see that price ends up taking out this 940 low, but we still have the data low. So in my terms of condition, right, I want to have this data low and equal low get taken out first, because I don't want to long as this obvious drawn liquidity is here present for us, right? So this is the conditions that I'm talking about, right? So if I want to see any longs, I want to have this data low and equal low get taken out first in order for me to even think about taking a trade, right? So let's just kind of see what happens here, right? This 940 gets taken out, and let's say you end up taking out this, you're taking this 1 minute inversion, right, and targeting this internal low. We see that price kind of goes up a little bit, starts chopping around, but ultimately we see that price comes down, and now it takes out this data low, right? So if you're going to take this trade, you're going to take this L, because we have this data low and equal low. Very, very obvious drawn liquidity. Now, since this condition might be playing out, we took out this data low. What am I looking at now, right? And this leg, this 1 minute is the highest time frame inversion, right? So this is my condition. If price ends up inverting this 1 minute, I'll be taking a long, right? Setting my stops below the lows and just simply targeting this internal high, because this is already around 80 points, and I could make it a little bit higher if you want to for more risk to reward, but let's just say this one I'm targeting. So now let's see what happens here. So price, boom, ends up closing above this 1 minute, right? So you take this entry, targeting the internal high, right? And we see price slowly and slowly, bang. So we hit that take profit, right? And we see that this is why conditions are so important, right? Because yes, you might have seen this 940 sweep and an immediate reaction higher, which does look good, but you want to see the higher time frame picture, right? We have a data low and equal low below us, and just because of that reason alone, I wouldn't have taken this long. Instead, I would have waited until this data low gets taken out. And as we see, once price takes this level out, we immediately have price go up higher. Okay, so taking a look at another example, right? This is the day before, and if you kind of zoom out on the bigger picture and you want to see what's kind of happening, right? We go on the hourly. In this case, we see that we have a new week opening gap here, right? We see that price ends up retracing to this new week opening gap, filling it fully, and then we start to see immediate prices higher, right? We have displacement higher, we have inversions higher, right? Since there's multiple hourly fair value gaps in this leg, I want to see kind of more confirmation for me to be long in, right? All right, so looking at here, we have this big imbalance, right? This 1 hour fair value gap that I want to see kind of close above and see some sort of follow through higher for me to be continuing to be bullish, right? And as for this, right, we have this discounted 1 hour fair value gap over here. We see price retrace to this 1 hour, and now we're starting to see some sort of a reactions high, right? I want to see potentially this high get taken and this high get taken. This is a previous day high, so that would be for the day before, right? We have all these levels marked out, so let's take a look at 30 minutes before market open. See that this 1 hour ends up getting closed above. We're seeing displacement through this high, right? And potentially prices to go up and continuing higher, right? We see price retrace down to this 1 hour, and pretty much my bullish bias in this case is playing out. Unfortunately, in this case, there was no real entries for me to take. We end up kind of taking out that high, right? So then we are kind of have to sit on our hands and be patient and see what happens after. We see that price ends up forming this new 4-hour fair value gap in this scenario, right? That also is followed by this 4-hour, right? And all of these lows over here, right? So we see all of this low resistance liquidity that price could potentially run, and this very discounted 1 hour / 4-hour fair value gap, right? So we see price retrace to this 4-hour, right? Now we see we have a lot of imbalances where we have a 5-minute, and a 15-minute fair value gaps all on this leg. So this could potentially act as our mech model, right? So what I would do is we're going to lower time frames and see if I have any type of entries. So in this case, we see that the highest time frame in this single leg is this 1 minute fair value gap, right? We see price ends up closing above this 1 minute with displacement. We could have either entered over here, waited for a little pullback, setting on this inversion, right? So let's say if you set your limit on that inversion, set stops below here, and now you have multiple targets depending on your bias and depending on how confident you are. You could simply get a little 1-to-1 or 1-to-1.5 risk to reward over here, which is perfectly fine. You're getting 80 points for this trade. Or let's say if you're really confident, you could be targeting the 5 or the 15 minutes. So let's just say for the scenario, let's say you're targeting the 15 minutes, there's around almost 200 points, right? So let's say you enter this trade, and once this 5-minute gets hit, I'll go break even and potentially take some profits off and hold it to this 5-minute and this 15-minute, right? So we have everything that we need for this trade, right? We're bullish, as you guys seen previously. We see that this very discounted fair value gap got hit, this 4-hour, and we start to see immediate prices higher, immediate displacement off of it. This is kind of price that you want to see. You want to see a very sharp V price action, right? So you see price came down here to this very important high time frame BD rate, and immediately we have this V-shaped recovery, right? This is kind of how you want to see your inversions get closed. You don't want to see 10 or 20 candles closing above those inversions. In this case, we have this 1 minute literally took 1-2 candles to close. Bang, we enter this trade, and let's see how it plays out. So we see prices going up here. Let's see if the 5-minute gets hit. Okay, so the 5-minute gets hit, right? I'll go break even now, and let's see if the next 5-minute gets hit. So bang, the next 5-minute also got hit. You could potentially literally just taking the trade out right here also. 146 points, perfectly fine. But let's say if you're really confident, you want to hold it to here, there's around 190 points, and we see that price ends up taking that also, right? So that's pretty much how I'd play these trades, right? So that's pretty much it for this video, guys. This is kind of how you put all the things together, right? We have session highs, session lows, liquidity pools, previous day highs, previous day lows, and it's kind of different every single day, right? You could be taking trades based on, like, for example, my first example, just on news like data low, data highs, right? Or you could be taking a trade based off high time frame fair value gaps, or you could be taking trades off of liquidity levels like previous day high and previous session highs and lows, right? So I gave you few examples, right? If you guys want to see more examples or still confused, join my Discord. I'll be helping you guys personally and showing more in details. But this is about it for this video, guys. This is how you put all the things together, right? Apply all the concepts, because ICT kind of teaches you guys all these different concepts, but nobody really teaches you how to apply those. So this is pretty much how you do it. And yeah, without further ado, I'll see you guys in the next video.